In the quiet corridors of Indian innovation, something extraordinary took shape, something that didn't roar out of Silicon Valley or echo through Wall Street, but instead rose quietly from the dusty streets of a nation determined to leapfrog into the future. The Unified Payments Interface, or UPI, wasn't born with fanfare or hype. It wasn't launched with IPO, flashy tech conferences, or billion-dollar rounds of funding. It came with quiet precision, with purpose, and above all, with vision. And now it is sending ripples, no shockwaves across the financial systems of the world, shaking even the United States to its core. What makes UPI different isn't just that it exists. The U.S. has payment systems, plenty of them, but they are fragmented, slow, and often weighed down by legacy infrastructure and corporate interests. In America, sending money to a friend or paying a small business can involve fees, delays, and the ever-looming bureaucracy of financial middlemen. ACH transfers can take days. Debit and credit card networks charge merchants a percentage of every sale. Bank apps don't always talk to one another. You can walk into a New York cafe and still find a sign that says, "Cash only." In the world's largest economy, instant, free, seamless payments are still more dream than reality. Meanwhile, in India, a farmer in a remote village can send money to his daughter in seconds using nothing but a basic smartphone, or even a feature phone with a code. A street vendor can take digital payments with a printed QR code stuck to a cart. There are no swipes, no machines, no third-party fees slicing into every transaction, and all of it, every last bit, moves in real time across banks, apps, platforms, and users. This isn't just convenience. This is a systemic reimagining of what money movement should be. And here's the part that makes American institutions uneasy. UPI isn't just a product. It's an infrastructure. Open, scalable, interoperable. It's not controlled by a tech monopoly or a handful of banks. It's backed by a government that dared to prioritize digital public goods. That model terrifies entrenched players in the U.S., who profit from the very inefficiencies UPI renders obsolete. Visa, MasterCard, PayPal, Zelle, they all offer pieces of what UPI gives whole, but none have matched its scale, its speed, or its underlying ethos. What makes this revolution even more profound is that it isn't limited to urban centers or tech-savvy youth. UPI is for the people. The rickshaw driver, the housemaid, the micro-entrepreneur, all now have a tool in their pocket that levels the financial playing field. That empowerment, that shift in agency, is something the U.S. has long struggled to deliver to its own underserved communities. And the realization that another nation has done it, at scale, and without the usual price tags, has become a quiet embarrassment in American policy circles. Of course, it's not just embarrassment, it's pressure, because now the world is watching. Nations across Asia, Africa, and even Europe are studying UPI, adopting elements of it, or building similar models. And the more this model spreads, the more outdated the American system begins to look. You can almost hear the boardroom whispers turning into boardroom alarms. The threat isn't just foreign competition, it's irrelevance. So, in the silence of UPI rise, the U.S. hears a growing roar, not of chaos, but of change. And perhaps for the first time in a long while, the call for innovation isn't coming from within, but from across the ocean. It's no longer a question of if America will respond. It's a question of whether it can, because the future isn't waiting, it's already arrived, in the form of a simple scan and a seamless transfer. While the world's financial superpower continues to wrap itself in red tape, magnetic stripes, and monthly statements, a quiet transformation is unfolding halfway across the globe. one that exposes just how far behind America truly is when it comes to the way people move money. In the United States, the dollar still holds power, but the way it moves, cumbersome, costly, and slow, is being challenged by a model that doesn't just move faster. It moves smarter. And nowhere is that more evident than in the story of UPI. Think about this: in 2025, with all our technology and infrastructure, sending money across bank accounts in the U.S. can still take up to 3 business days. Weekends and holidays, they shut down the system like it's a bank from the 1980s. Want to transfer instantly? Sure, but be prepared to use third-party apps that take a cut of your funds, sell your data, or rely on workarounds that aren't truly embedded in the banking system. Meanwhile, in India, a country with per capita income far below the U.S., citizens, millions of them, send money to one another in real time with zero fees directly from their bank accounts. No gimmicks, no tricks, just frictionless movement of value. That's not just a difference in technology, that's a difference in philosophy. UPI wasn't created to serve shareholders. It was created to serve citizens. It's a national payment backbone that runs 24/7, open to every bank, app, and person. And it doesn't need to sell your attention or skim your transaction to be viable. It's built on the belief that moving money should be as simple as sending a message, and as public as a highway. In the U.S., by contrast, financial systems are often run like toll roads. Every movement is an opportunity to take a cut, and that model is now beginning to look archaic. And that's where the deeper tremor lies. Because this isn't just about faster payments. It's about who owns the rails. The American dollar has long ruled the world, not just as a currency, but as a system. SWIFT, Visa, MasterCard, PayPal, these were all extensions of American soft power. They dictated how global trade, remittances, and personal finance would work. But UPI is chipping away at that influence, one QR scan at a time. It's proving that you don't need U.S.-based infrastructure to build a scalable, secure, and inclusive digital economy. That's a dangerous idea for those who benefit from the status quo. If India can create a world-class payment system without charging merchants and consumers a dime, what excuse does the United States have? If UPI can bring digital payments to remote villages, empower street vendors, and unify banks of all sizes under one open protocol, what's stopping the wealthiest nation in the world from doing the same? The uncomfortable truth is that the U.S. didn't fall behind by accident. It stayed behind because too many institutions were making too much money keeping things exactly as they were. But the world is changing. Countries like Brazil with Pix, Nigeria with NIP, and Singapore with Pay Now are following UPI lead. They're realizing that financial efficiency isn't a luxury. It's a competitive advantage. And with each passing day, America's grip on global payment norms grows just a little weaker. In the end, UPI is not just a better payment system. It's a mirror, showing America what the future could look like if it stopped protecting outdated systems and started building public infrastructure that worked for everyone. Because money may still be power, but the way it moves, that's where the future is being written, in boardrooms across Silicon Valley and on the glossy floors of Wall Street. There's a quiet anxiety brewing. You can sense it behind the polished press releases and carefully worded earnings calls. Something is shifting, something they didn't expect, because for the first time in recent memory, the most disruptive force in global finance didn't emerge from the United States. It wasn't built by a unicorn startup or a trillion-dollar tech titan. It came from the public sector of a rising economy. And now, as the Unified Payments Interface UPI spreads its wings beyond India, America's tech giants are starting to realize they're no longer the only ones writing the future of money. It's a strange feeling for the U.S. to be outpaced in innovation by a country it once considered a digital laggard. After all, the narrative for years was that America leads and the world follows. But that's no longer the story. Not when Google Pay and PhonePe in India process more real-time transactions than Apple Pay, Zelle, and Venmo combined. Not when the Indian government, not a private corporation, created a platform so efficient, so inclusive, and so scalable that it turned an entire nation cashless faster than any market-driven effort ever could. Now, those very same tech companies, Google, Amazon, Meta, are trying to adapt. They've watched UPI grow from a domestic initiative into a global benchmark, and they've realized they can't ignore it. But the catch is, they also can't control it. That's what makes them nervous. In the American model, tech giants build walled gardens. They own the platforms, the data, the fees. UPI flips that model upside down. It's open, it's interoperable, and it's free. That last part is perhaps the most radical, because UPI doesn't take a cut from each transaction. It doesn't sell ads or monetize data trails. It simply works beautifully, securely, and at no cost to the user. That reality has forced a reckoning, because in a market like the U.S., where payment companies are used to squeezing profits from every swipe and tap, a model like UPI seems almost unthinkable. How do you compete with a system that doesn't want to profit from people, but to empower them? How do you justify charging 3% on a card transaction when a vendor in India can accept a digital payment instantly and freely from anyone with a bank account? This tension is now showing. American companies are lobbying harder, pushing for proprietary standards, and racing to offer faster payments. The Fed is finally rolling out FedNow, years behind UPI, and still limited in scope. Banks are trying to retool old systems to resemble what India already has. But there's a deeper discomfort underneath all this scrambling. The realization that the U.S. is no longer the default source of digital innovation. That discomfort becomes even sharper when you realize how deeply embedded UPI is becoming in daily life. Not just in cities, but in rural India, across demographics, across languages and literacy levels. And as other nations take note, as they begin to emulate or partner with UPI, a global standard is emerging that wasn't written in English, hosted in California, or owned by a private corporation. What we're witnessing is more than a shift in payments. It's a shift in power, a quiet revolution where the next phase of global digital finance might be shaped not by the U.S., but by the very countries it once thought would always be a few steps behind. And if the giants of Silicon Valley are nervous, it's because for once, they're not steering the ship. Now, they're just trying to stay on board. For decades, the foundations of global finance were built on a simple principle. Those with access win, and those without are left waiting at the door. In the United States, this principle is stitched into the very fabric of its economic systems. Banks serve the creditworthy, cards serve the connected, and the unbanked, tens of millions of them, remain on the outside, paying more for less. And yet, in a nation like India, where infrastructure gaps were once vast and financial exclusion was the norm, a very different story is now unfolding. A story that's shaking America's deeply held assumptions to their core. It begins with a simple idea that digital payments should work for everyone, not just the elite. UPI was never about margins or market share. It was about mass inclusion. It took what was once a luxury, fast, cashless transactions, and turned it into a right. No app subscriptions, no minimum balances, no exclusion based on geography or income. Just a basic bank account, a phone, and the will to connect. Suddenly, the vegetable seller, the chai vendor, the migrant laborer, all had access to the same financial tools as billion-dollar firms. In India, this became the new normal. In the U.S., it's still an unsolved dream. The truth is, the American financial system wasn't built for everyone. It was built to be exclusive, designed around credit scores, zip codes, and profit margins. Try opening a bank account in the U.S. without formal ID or stable housing. Try sending money instantly without losing a percentage to a third-party app or card network. Try building financial history without debt. In India, UPI tore down these barriers with a force that was both radical and refreshing. In the U.S., these same barriers remain stubbornly intact, and that's where the disruption cuts deepest. Because UPI didn't just improve a system, it proved that a whole new system is possible. One where financial dignity isn't a privilege but a baseline. One where even the poorest citizens are seen, connected, and empowered. That's what threatens the American model. Not just the speed of transactions or the lack of fees, but the philosophy that underpins it. The idea that financial infrastructure should serve people first and profits later. In the United States, financial inclusion has always been reactive. Pilot programs, fintech startups, grant-funded studies, small steps taken only when forced by crisis or public pressure. But UPI is proactive. It was engineered from the ground up to bring everyone into the fold from day one. It's not trying to include the margins, it erased the margins. And as other countries begin to copy that model, it's becoming painfully clear that America's approach has been too slow, too narrow, and too commercial. Of course, this isn't just about moral contrast. It's about competitive disadvantage. When millions of Indians can transact instantly, save securely, and access credit without middlemen, their economy becomes more efficient, more inclusive, more resilient. And when America's own underserved communities continue to rely on predatory lenders, check-cashing stores, and outdated banking practices, it loses not just financial equity, but human potential. That's the real cost of inaction. While the U.S. debates the risks of free payments, the world is embracing the rewards. While American regulators worry about who loses money in a no-fee model, the rest of the world is building systems where more people finally have money to move in the first place. And with every scan of a QR code, every transaction made from a remote village, every dollar equivalent moved without friction, the message becomes clearer. The future of finance doesn't belong only to those who built the past. It belongs to those bold enough to build something better. There's something quietly profound happening in the places where the world rarely looks. In a narrow alleyway, beneath a faded tarp, a street vendor is selling fruit, and next to the oranges and bananas, there's a small square of paper, laminated and taped to a wooden cart. On that square is a QR code. And in that moment, with one scan and a soft beep, a digital payment is made. No cash exchanged, no cards swiped, no point of sale machine, just a phone and a system built to include the people most often ignored. That image, so ordinary now in India, is sending shockwaves through the world's financial centers, particularly in the United States, because behind that simple scan lies a threat, a very real one, not to governments or currencies, but to the institutions that have long profited from exclusion. In the United States, the unbanked and underbanked are often trapped in a cycle of high fees and limited access. Paycheck cashing services, payday loans, prepaid cards, tools that extract value from the very people who can afford it the least. These aren't just fringe cases. Tens of millions of Americans live like this every day, moving through a financial system that was never built with them in mind. UPI breaks that cycle. It doesn't ask whether you're credit-worthy. It doesn't charge you a fee for being poor. It meets people where they are, on their phones, in their language, and with a dignity that transcends traditional banking. It creates a direct bridge between citizens and the digital economy, without the toll booths of middlemen. And in doing so, it reveals an uncomfortable truth, that financial exclusion isn't inevitable. It's a choice, a product of systems designed to serve the powerful first, and the rest when it's convenient. Now, that model is being challenged, not by slogans, but by results. With UPI, more than 350 million people have joined India's digital payment network, many of them for the first time in their lives. They can send money to family, receive government aid, pay bills, buy groceries, without ever needing a debit card or a bank branch. This isn't just about convenience. It's about access. It's about rewriting the very idea of who gets to participate in the economy. In the U.S., meanwhile, inclusion is often treated like a bonus feature, offered by fintechs that promise to democratize finance, but still rely on business models that extract value through fees, data collection, or hidden costs. The irony is that while America has the tools and the technology, it lacks the political will to build a truly public payment infrastructure that works for everyone. And so, the people who need it most continue to wait, trapped in systems that benefit from their delay. But the world is watching. Countries across the global south are studying UPI not as an Indian story, but as a universal blueprint. They see its power, not just to move money, but to shift power. And with each new adoption, the global financial map begins to change. It no longer centers on Wall Street alone. New hubs are forming, built not on exclusivity, but on access, not on profit, but on participation. This is what makes the UPI model so disruptive to the American system. It's not just better, it's more just. It shows that inclusion can be designed, not patched on, that technology can serve people first and still scale, and that the most transformative innovation isn't always the loudest or the most branded. Sometimes it's a QR code on a wooden cart, quietly rewriting the rules of the world's oldest game. And the United States, if it's paying attention, will realize this isn't a ripple, it's a wave. Every few decades, a moment arrives that forces the world to reevaluate what it thought was permanent. The post office was once thought irreplaceable, until email. Taxis ruled the streets, until ride-hailing apps disrupted the asphalt. And now, in the quiet hum of a smartphone and the flash of a QR scan, we are witnessing another such shift. A shift that is not only transforming the mechanics of money, but shaking the confidence of a system that once believed itself unshakable. The Unified Payments Interface UPI isn't just changing how money moves. It's changing how nations think about sovereignty, influence, and control in the digital age. And no country is feeling that tremor more deeply than the United States. For nearly a century, the U.S. dollar has reigned supreme, not just as a currency, but as infrastructure, into where it may no longer dictate the rules of money, where its networks are no longer the default, where a small QR code in a market stall halfway around the world might represent not just a transaction, but a declaration of independence from a financial order once thought immovable. That realization is setting off alarms, not just in finance, but in foreign policy. Because in the quiet, seamless flow of digital payments, a louder message is emerging. The future of money will not be inherited by those who once ruled it. It will be built by those bold enough to reimagine it from the ground up. And that future has already begun. How powerful. UPI gives them an answer, a scalable, inclusive system that isn't tied to American interests. It doesn't just offer independence, it offers resilience. Meanwhile, in the U.S., the reaction has been slower, more cautious. The FedNow system, America's long-awaited answer to real-time payments, arrived late and limited. It's not open to everyone. It's not designed for inclusion. And it's far from the kind of bold infrastructure that UPI represents. Because here's the truth. While UPI was built as a public good, American systems were built as profit engines. That difference in intent has created a difference in impact. And now, it's creating a difference in influence. The United States is waking up to a world international settlements flowed through SWIFT. Credit cards were powered by Visa and MasterCard. When people in other countries wanted to trade, they often did so in dollars. That wasn't just economic dominance. It was strategic leverage. Control the rails, and you control the speed and direction of global commerce. But now, those rails are being questioned. Because UPI doesn't just offer an alternative way to move money. It represents a new kind of monetary independence. When India launched UPI, it wasn't just solving a technical problem. It was reclaiming control. It was building a platform where Indian citizens could transact freely without relying on foreign card networks or private intermediaries. And now, other countries are starting to take notice. They're looking at UPI not just as a payment system, but as a model for digital sovereignty, as a way to build domestic financial infrastructure that isn't